Good evening, dear students. Welcome to the class of income tax. And today we have our fourth session and chapter 2, that is residential status. And today we have the last session of residential status, in which we will discuss the last provisions of how to determine the status of an individual and the HCF subclassification, what we left in our previous class, and the incidence of tax. A lot of students have asked me, and what income is going to be taxable for a resident or a non-resident? If some non-resident is in India, then will he liable to pay tax, etc., etc. So all these kind of query will be solved today automatically when we will cover our this topic. So you all know the guidelines for the class. As I already told you, I already uploaded the notes, and I have already uploaded in the notes that you should be focused during the class. Try to take live classes. Try to focus during the class, and please ask me your queries, whatever it is. I'll answer all those queries after 30 or 40 minutes of class. If any students want to ask their query in Hindi, they can ask me in Hindi. I'll answer those queries in Hindi also. I hope whatever we have studied in our previous section or sessions, I hope you all go through that and must be understanding the provision till now. So we have covered our basic concept, chapter 1, and we are moving on to our chapter 2. And today will be the completion ceremony kind of chapter 2. And then we will move on in our last session, that is on 23rd. That was the chapter number 3, that is income do not liable to tax, or we can say that exempted income. So before starting this class, let's have a good morning to good evening for everyone who have messaged me about the good evening. Hitesh, good evening, good evening. Jarinder is good evening, good evening. Jarinder is saying, sir, I solved remaining MCQs. 12, 13 and 14, and also illustration 4 of chapter 2. Okay, very well done. Thank you so much. If you are doing what I'm saying, that's gonna help you, really. Yogita is saying, hello, of course. Good evening, Yogita. Riya Doshi, good evening. Aniket, good evening. Anikesh Srivastava. Mahadev, good evening. Soumya is good evening, of course. Neha, good evening. Matanjali, Menon, everybody, good evening. Namaskar, Sat Sri Akal, Shabba Khair, Vadakkam, Kem Cho, whatever it is, everything fine. Ankit Gupta is good evening. Parampreet Kaur is good evening. Manka is good evening. Poonam Sharma, good evening. Santosh, good evening. Good evening. Good evening. So, as I generally do, before starting the class, let's share a very important, we can say, the statement or quote or an inspirational, motivational quote for you. And that is from the Swami Vivekananda. And he has said, arise, awake and stop, not till the goal reached. It's a very famous quotation. And I hope you all have already know about this quotation, but reading something or understanding something is two different things, two completely different things. We might have read this quotation earlier also, but you should understand this is actually applicable in your course, that is CA course. Arise, awake. That means you should arise from inside, not the physical arise is important. You should awake yourself that yes, this is my goal. I have to work hard for it. Somebody is saying arising means that just need to wake up and that's it. No, arise to achieve that goal. That means work hard for that goal and stop not till the goal reached. And you should continuously work hard until that goal, whatever it is not reached. And believe me, if you have patience, focus, hard work, there is nothing is impossible. Everything almost can be achievable if you have these three things. I used to use a lot of time the word focus. What is the meaning of focus technically? Focus means whatever you are doing, just concentrate on that thing. For example, if you are taking my class this time, and if in some students, they are thinking about something else also. They are watching my class. They are listening what I'm saying. But might be there are other thoughts also running in their minds regarding like they have some party, they have to go somewhere, they have some other plans, they are thinking about someone. So if you are actually listening to me, but actually occupied also somewhere, that means you are not focused. So you are wasting your time technically. But you are over here and you are not getting what I'm saying to you, what I'm trying to make you learn, and even you can't do what you are thinking right now. So better if you are here, just focus your 100% concentration over this class. If you are partying, if you are in some party, then enjoy that party. At that time, do not think about studies because there is none use. If in party you are thinking about the study, so you are not going to enjoy the party as well as you can't study at that time. So what is the fun of wasting both time? So if you are studying sometime, just be focused at that time in studying. Forget each and everything. If you are some other place, you are in party, you are playing some game, you are watching movie. At that time, do not bother about study. Just think about that movie, enjoy that part. So whenever you're studying, I personally want to advise you, just try to make sure that somebody is not going to disturb you. If it's possible, you can study at night or early in the morning, because that's a time when generally people do not disturb you. As I can say you that in whenever I was studying, I used to study from 10 p.m. to 2:30 or 3 a.m. at a night duration. Of course, from 10 p.m. I start studying my all subject, and until 3 or 2:30 a.m. I used to study continuously. So at that time, generally we do not have any family work, we do not have any disturbance from any relative, etc. Yeah, friend can disturb you. So I suggest you please switch off your internet or Wi-Fi, so they might do not disturb you. And if somebody is disturbing you, block that person for that time. So that was the advice from my side to you. I hope if somebody is going to follow it, they'll definitely gain some benefit from it. Moving on to our subject, the topic we were discussing, we were on the residential provision. And as far as we were discussing about the chart, okay, let me share the chart. Okay. So we were over here, we discussed about the provision regarding the individual, that is normal resident, what is the deemed resident. I have explained you the provision regarding the being a normal resident. Either you will be a resident as per condition number A, we have two basic conditions, or you might be a resident on the basis of a special condition. And we have three sub special condition. That was first one for individual citizen going outside India, individual citizen or TYO come to visit to India, and the third one was a special category. I hope you must have gone through all these provision, and with the help of a chart or a diagram, I personally believe you might getting these provision very easily, very easily. Today I'll also discuss how to remember the section, etc. Jayendra is saying, sir, you said for reminding trick for learning section. Yes, thank you so much, Jayendra. I'll explain you before ending this class how to learn each and every section on your tips. And whatever I'm sharing with you, even if I'm saying switch off your Wi-Fi, do not talk, or if I'm saying that try to study at the night time or early in the morning. So these are, I'm actually believe on these things because I have done this thing. The trick I'm going to tell you for learning section, I have done that trick. That's why I'm saying to you. And because I was a very average student, that's why I believe that if that trick works for me, then for each and everyone who are sitting or watching me, that trick is going to work for you also. Just try it once. Just try it. Trust me, just try it once. And you will try it and you will find that, yes, it actually works. Okay. So we already discussed the provision regarding the deemed resident also. We were technically on the provision of how an individual who is a resident as per condition A, B or C become a resident or not ordinary resident or a resident and ordinary resident. So I am suffering from a severe cold and a little bit of fever also. So we are already having a social distancing, so you need not to worry about it. So might be my voice is little different today. If you are feeling that, I'm trying to explain the things as comfortable as we can communicate with you. So moving on to the provision when a person will be a resident and not ordinary resident. So with the help of a chart, let me explain you again. So when a resident will become a resident or ordinary resident or a resident and not ordinary resident. Fine, we have these two conditions. We have first condition, we have already discussed. I have already explained with the help of an example also that if you are less than 730 days, resident, ordinary resident, and that was resident, not ordinary resident. So first condition was if you are less than 730 days, not equal, less than 730 days in 7 ppy, then you will be called a resident and not ordinary resident. Clear? Second was, I have said this to you. I'll explain you with the help of a example also, that out of 10 preceding previous year, you must be at least 9 years must be a non-resident in India. Out of 10 preceding previous year, you must be a non-resident status for 9 years or more in out of 10 preceding previous year. Third one was very simple and fixed. If you are a deemed resident, then you automatically are resident and not ordinary resident. And that was last is fourth. What we skipped at that day because the conditions were very complex already. So I asked you that we will discuss this point later. So today is the time when we are going to discuss it. So point number fourth is applicable for that person who fall in the C special category. So in case number B, there were 3 special cases, exceptions. Third exception case was an individual who is a citizen or person of Indian origin who reside outside India and came to visit India in previous year having a total income exceeding 15 lakh rupees from Indian sources. So that person technically become resident either when he is in India in previous year for more than or equal to 182 days in India. Fine, that was first condition. Or there were a new second condition that say in previous year he must be in India for more than equal to 120 days, and in last preceding 4 previous year he must be in India for equal to or more than 365 days. So this fourth case is only applicable for that person category. So if a person become resident due to these exclusive cases, then for that person, he or she will be treated as a resident and not ordinary resident if they fulfill either first condition less than 730 days in 7 ppy, same, either he or she fulfill 9 out of 10 year non-resident concept, and there is a new condition, that is third one, is specifically applicable for that category of person. You can say these two conditions. Do not get confused. It's say these two conditions is applicable for all resident, whether you have become a resident due to case number A or due to case number B, any case. But this condition, technically this condition is new condition because these are same condition as above. So for this person, these also applicable. And this is the only new condition which is only applicable for this category of person. And it says he will or she will be a resident and not ordinary resident if they fulfill either this or this. And this is a new condition that he is or she is more than 120 days in previous year, but less than 182 days in previous year. So if that person is in India for more than equal to 120 days in previous year, but less than 180 days in previous year, in that case, what will happen? He or she will be treated as a resident, but not ordinary resident. Here are the conditions for point number 4. That say point number 4 say for a special case B, point number 3, and it says if he fulfill, this is the new condition what we are discussing in the board, the third point, that is the first point in this over here. more than equal to 120 days but less than 182 days in India in previous year, then he or she will be a resident or not ordinary resident. And BSCR condition are same, less than 730 days or non-resident for more than equal to 9 days out of 10 in 10 preceding previous year. So for that special category of person, there is only one new technical condition. So there are written 3 conditions, but these are applicable for all as well as this also. This is new condition and which is exclusively applicable only for those third category of the exceptional case person. I hope it's clear. Let's discuss it with an example. I am going to discuss example of condition number 2, and as well as I will discuss an example of condition number 4, third category of person. Example is like this. For example, Mr. W is a foreign citizen. Almost same kind of example I have discussed in the last session also. For first point, Mr. W, a foreign citizen, visit India every year for 110 days from last 11 years, including previous year. Okay, fine. If Yajat has joined the class, I don't know Mr. Yajat has joined the class or not. Mr. Yajat has asked me a question, illustration number 7 on page number 1.58 of study. And I told him in the last class that I will discuss in the last session or today. So let me tell you, Mr. Yajat, that question, illustration number 7 on 1.58 page, it technically belongs to the long-term capital gain taxability provision. Long-term capital gain have a special rate of tax. So technically that is not in first chapter. There is a provision of long-term capital gain. In that you understand special rate has been actually applicable in case of long-term capital gain. So that's why you are not able to solve those special rate questions, that is kind of long-term cap gain. For the time being, I can tell you, you asked me about that question, and that question has been given that Mr. A, 35 year of age, that is a other category individual, having a long-term cap gain of 4,80,000. So long-term capital gain is a tax rate applicable as 20% fixed. You will get to study these kind of provision, the rate of long-term in the capital gain chapter or computation of total tax chapter. So long-term 480, but the long-term taxable rate is 20%. Slab rate is not applicable upon it. So 2,50,000 basic exemption has been given out of this, and remaining is 2,30,000. So now there is no slab rate applicable, so tax will be 46,000. But because it's an individual who is a resident and TI is less than 5 lakhs, so we can claim a rebate of 12,500 out of this 46,000. And remaining tax will be 33,500. Then 4% cess will be applicable. So final tax liability will be 34,840. So if Mr. Yadav is here, kindly note down this. Okay. So these provision is not relevant. If any other students is also going through any question in basic chapter, which is comprising long-term cap gain, short-term capital gain, dividend income, casual income, etc. So that is technically not in the first part chapter. The might be illustration have been made, but the special rate you will be discussed in detail when you will study the long-term capital gain chapter and the computation of tax chapter. Okay. So our question was that Mr. W, a foreign citizen, comes to India for 180 days every year, and from last 11 years, including the post previous year. So previous year and last 10 years information has been given, and now you have to find out the residential status of Mr. W, because he is a foreign citizen. So, and also it is not given in question that he is a person of Indian origin. So that means exception will not be applicable. That means case number B is not applicable. So we need to find out whether he is a resident or non-resident as per basic condition number A. Whether he is in India for more than 182 days in previous year, no. Second condition, whether he is in India for more than 60 days in previous year and more than equal to 365 days in 4 previous year, preceding previous year. So he is in India in the previous year is for 110 days. This condition has been fulfilled. And the last 4 preceding previous year, he will be in India for 440 days. So this condition has also been fulfilled. So technically, Mr. W is a resident in India. And now because he is a resident in India, so we need to check whether he is a resident and ordinary resident or whether he is a resident and not ordinary resident. We have 4 conditions for this. First condition, he must be in India for less than 730 days. If somebody is studying in study and it is written that 729 days or less, that's the same meaning. We can write it like also this, that is 729 days or less, the same thing. Or we can directly say less than 730 days in 7 ppy. So because he is visiting India for 110 days every year, so in last 7 preceding year, he will be in India for 770 days. So is 770 days is higher than 730 or less than? Of course, it's higher than. So this condition has not been fulfilled because we need less than 730 days. So now we will move on to second condition. It was in last 10 preceding previous year, he must be a non-resident for 9 or 10 preceding previous year. Now, how this is going to be checked? Generally, students, after reading this provision, thought that it is very difficult. We have to check 10 preceding previous year information. Yes, as per the norms, as per the provision, you are thinking correct. But it is not that difficult while we are solving a numerical. Like how? I have to write 10 preceding previous year except the previous year. So my previous year was 21-22. Let's leave that. And the last 10 preceding year we have to write like this: 20-21, 19-20, 18-19, 17-18, 16-17, 15-16, 14-15, 13-14, 12-13, 3, 4, 5, 6, 7, 8, 9. And last is 11-12. So we have now these 10 preceding previous year. I have to check whether he is out of these 10 preceding previous year, 9 years non-resident status. So we have information for last 10 years. For last 10 years, he comes to India for every year 110 days. So technically in 20-21, he was in India for 110 days. So again, in 20-21, we have to check the basic condition again. We have to check again whether he is a resident or non-resident as per these basic conditions. So because he is in 20-21, he is in India for 110 days. So he is not fulfilling first condition in previous year 20-21 as well. But in 20-21, because in that previous year he is for 110 days and last 4 preceding previous year, he is in India for 440 days. So he will be a resident in 20-21 year. Because he is fulfilling again second basic condition in 20-21. So he become resident in 20-21. And we need 9 years non-resident. Again in 1920, he was also again in India for 110 days. And again, he was in India for 440 days in last 4 preceding previous year from the previous year 1920. So again in 1920, he is fulfilling basic condition number 2. So again, he will be called a resident in 2021 as well as 1920. Now, being a smart student, study is important, but there must be a smart study. So if I am finding out a status out of 10 preceding year, and if I need to find out whether he is non-resident for 9 or more years, and if out of these 10 preceding year, he became resident for 2 years, just in the 2 preceding year. So if somebody has become resident out of 10 preceding year for even 2 years. Now this condition cannot be fulfilled because now the remaining year has left 8. So even if he is a non-resident in all those 8 years, even this condition cannot be fulfilled. So that's what I was saying, that in the examination, question will be framed like this. Then in the preceding 2 or 3 years, you will come to know that either he or she is fulfilling these conditions or not fulfilling these conditions. So even if somebody become resident for 2 years, then you need not to check for 8 preceding previous year status now. You can directly write it down because he is now 2 years resident. So this condition also cannot be fulfilled. Again, third is not applicable for him because he is not a deemed resident case. Fourth is again not applicable because he is not a basic condition third exception case person. So because he is not fulfilling this, so he will be called a resident and ordinary resident. Understood? So in the examination, examiner will not frame cases which is like this. He will frame those cases which you can find out whether he is a resident or a non-resident. Understand? So that was the provision which was very important for the purpose of this kind of provision. Fine. Moving on to other. Now I am asking a numerical question from all of you. Kindly read it carefully and answer me. Fine. It's very today we have also again going to have MCQ. After our this session, at the end of the class, I will take an MCQ test of yourself. Please have a paper, pen, a calculator because you need to calculate the days, and days calculation must be accurate. Okay. So here is a question for all of you, and let's see who can solve it. Mr. A person of Indian origin, we can say POIO in short, comes to India for visit. 200 days on 1st December 2021. First time. He never came to India before that. So first time he came to India on 1st December 20-21 for 200 days. Find out his residential status. So kindly find out his residential status, whether he is a resident, ordinary, not ordinary, or non-resident. You all have 2 minutes to solve this question. Where is my mobile phone? Okay. So I am giving you the 2 minutes to find out the correct answer and send it to me. Let's see who can give the correct answer. If somebody has not found the MCQ, I have uploaded those MCQ, I guess, today morning around 10 or 11 a.m. So if it is not on Board Study app, then you can find it on the portal also. Vishal is saying, sir, it feels a true friend is talking to you. Let me tell you, whatever time you study for your examination or whatever time you study, inform your relatives and your good friends or those person you used to generally talk on phone that this is my study time. Please do not disturb me during this duration. Tell them. And if somebody is disturbing you intentionally or that duration, he or she is not your true friend, not your true relative. So block those person from your life. If somebody, so please do inform them also that this is my study time. Please do not disturb. And if somebody continuously doing this intentionally, then you have to stay away from that person because he is not a well-wisher of you. You will find it out who are technically your true friends or not. Fine. W is a resident and ordinary resident. Mr. Akash Neel has sent me the answer. Vishal Agarwal. Please answer my request also, which is messaged you. Please send me the message again, Vishal, whatever your mistake is. So the question was, get well soon. Yes, I hope I'll get well soon. Akash Neil is asking, what is the concept of continuous discharge certificate? I have told you, Akash Neil, that there is a separate concept in case of crew members. We will discuss today after the end of this topic what is the meaning of continuous discharge certificate. That's a very simple topic. I'll of course going to study that, explain you that. Sakshi is saying, sir, I am also study at the night, so no one can disturb. Just off your Wi-Fi mobile data or switch off your phone. That's gonna really help you in your study, of course. Harsh saying, good evening, sir. Big fan of yours. I'm also a big fan if you clear this examination. Fine. Okay, Mr. W. Madhuri is saying, Mr. W is resident and ordinary resident. Okay. Okay, Yajat is saying, okay, solving my question. Yajat, okay, thank you, welcome. Okay. Vikas is saying non-resident. Mahadev is saying non-resident. Aniket Srivastav saying resident, not ordinary resident. Ankit Gupta is saying non-resident. Ritik is saying non-resident. Madhuri is saying non-resident. Sakshi is saying year ending date. Sakshi, year ending date is 31st March 23 or whatever. We are, 22 because we are studying provision for previous year 21-22. Himanshu saying resident. Okay. Harsh saying non-resident. Ayush saying non-resident. We have to find the status for a post in all questions for previous year 21-22. Resident, non-resident. Shri Jani Sinha is saying. Janinder is saying non-resident, non-resident. Okay, fine. The correct answer is, of course, non-resident. So those are giving the correct answer, non-resident. High five from Wi-Fi. Well done. Very nice. Because why he is a non-resident? It's very simple. Because we have to find out the resident status for previous year 21-22. So our duration will be from 1st April 2021 31st March 22. During this duration, he or she should be in India for more than 182 days because he is a person of Indian origin and comes to visit India. So technically both conditions will not be applicable for him. Only first condition of more than 182 days is going to be applicable upon him. And from 1st December till 31st March only, we need to see. If somebody is saying 200 days and answering, yes, he is a resident because 182-day condition has been fulfilled. But the condition should be checked till the end of the previous year. So from December, if we take 31 days of December, because the day of arrival and departure will be included in India. So if he's coming on 1st December, so first day also include as stay in India. So December 31 days, January 31, February 28, because it's not a leap year. If it's a leap year, 29 will be taken, and March is 31. So technically, he is in India till 31st March is 8, 9, 10, 11, 121 days only. So out of 200 days, he is up to 31st March is only 121 days. The remaining 79 days, he is in India for previous year 22-23, not for 21-22. So he or she will be called a non-resident in India directly. This is the question. I guess it has been also come in exam. I guess in previous some year. I thought it has been in examination. And the question I have just solved you before this question, 110 days. And the other day, the previous lecture, 100 days. That was also an examination question. So I am not going to giving you those questions. Those are very simple. These are not simple questions. These are examination questions. So you should understand questions are not difficult at all. Not. It just you should learn the provision and the way to implement it. If you know the answer, if you know the provision, if you know how to implement it, there is nothing is difficult in this whole world. Everything is simple if you know the solution. And if somebody has given me the wrong answer and now he or she is understanding, yes, it was so easy. So until you did not apply it correctly, you found it very difficult. And as soon as you understand the concept, you now find it very easy. So that's the simple thing. If you have proper knowledge and the proper way to implement it, everything is easy in this word technically. We can say that. Okay. So I have received a lot of answers. Very nice. Good. So moving on to the provisions, we have covered our provisions of being a resident, non-resident, resident and not ordinary resident concept. They were core concept in that case. Now we have left with the HCF provision. I have just, when we discuss about the HCF concept, that was the concept like this. I have told you that after the individual whole process, we will discuss about those HCF remaining parts. So here is the HCF remaining part. It is same as individual concept. HCF residential status depending upon the control and management, that is business meetings. Fine. So if the whole business meeting or all business meeting outside India, then HCF will be of course non-resident. And if all or any business meeting has been held in India, even one, then it will be called a resident HCF. And now if resident HCF becomes, then we need to find out that it's Karta. Karta is the eldest co-partner of that family. We need to check his status, that whether he fulfill these conditions or not. So if the Karta fulfill these conditions, then in that case HCF will be called resident and not ordinary resident. And if Karta does not fulfill some condition, then the HCF will be called resident and ordinary resident. Understand? Now the condition is exactly almost same what we discussed in the case of individual. In individual, when somebody is resident, then the first two condition is to explain what is the meaning of resident and not ordinary resident. And it says if less than 730 days in 7 PPY. Clear? And second was non-resident for more than equal to 9 years out of 10 preceding previous years. So if somebody is fulfilling any one of them, then he or she become the resident and not ordinary resident. Now we need to understand there are same condition applicable in case of HUF also, only to these conditions, but in a vice versa manner, in an opposite manner. HUF does not explain resident or not ordinary resident. It explains when HUF will be called a resident and ordinary resident. Understand what I am trying to say? It's a very simple thing, just has been explained complicatedly. Otherwise, it's very simple because it's income tax, so it needs to be like this. So if somebody does not fulfill these both conditions, he or she will become resident and ordinary resident. So now I can write these conditions also like this, that if somebody is more than equal to, when this condition will not be fulfilled, when somebody is more than equal to 730 days in 7 PPY, we have to just write down the opposite of this condition. That means if condition is resident and not ordinary resident is this, that somebody should be less than 730 days in 7 PPY. Now I ask you, when this condition will not be fulfilled, so if somebody is more than or equal to 730 days in 7 preceding previous year, it's simple. There is nothing new I am telling you. It's just the reverse of this condition we need to explain from the other side. So if less than 730 makes you a resident and not ordinary resident, that means more than equal to 730 days will make you a resident and ordinary resident. So if Karta of a HUF is more than 730 or equal to in 7 PPY, and a very important word, if you fulfill any one of them, then you become resident and if you fulfill any one of them, then you become resident and ordinary resident. And if you does not fulfill both of them, then you become resident or ordinary resident. So if you want to become resident and ordinary resident, you have to violate both of them. You should be more than 730 days or equal to 730 days in previous year, and opposite of this condition now. For becoming a RNOR, you have to be non-resident for at least 9 years out of 10 preceding year. And if to violate this, now you have to be 2 years or more resident, as we have seen in the question, out of 10 preceding previous years. So if somebody is fulfilling this also, and fulfilling this also. That means he or she does not fulfill any of them. Understand? If he or she does not fulfill any of them, then what does it mean? He or she will be called a resident and ordinary resident. So technically, when somebody is not fulfilling any of them, that means he or she is fulfilling both of them. In the previous example, we discussed Miss Dr. W has coming for 110 days every year. So in that case, you saw that he was not fulfilling this or this. Sorry, this one and this one. He was not fulfilling any of them. So that means he was fulfilling both of them. He was more than 730 days in 7 preceding previous year, and he was 2-year resident out of 10 preceding previous year. So you might be thinking, why like this? They can also explain again the same concept like this as we discussed in, because the answer will be same. If you find the answer like this, again it will be the same answer. If you want to find answer like this, it will be again the same answer. So why like this? So technically why like this? I can't help you, because in the act, HCF status has been explained on the basis of these conditions, reverse condition. An individual has been explained on the basis of these conditions. So for the purpose of examination also, if the HCF question come, you have to write out these conditions and need to answer according to these propositions. Fine. And if in case of individual it's coming, you have to write down these conditions and find the answer on the basis of these provisions. Understood? But they are technically same. If you have learned these conditions, then you can understand how to learn these. If you have learned this, automatically you are learning these. Clear? So that was the provision regarding the HCF. We have discussed the HCF provision. We have completed the resident provision. Now there is a concept in case of crew member. I have told you there is a special provision regarding the crew member or employee of an Indian ship. What is the concept in case of crew member or employee of an Indian ship? There is only one single provision. As for Mr. A or a normal person, the day of departure technically, for example, he is leaving India on 14th September 2021 and coming back to India on, we can say, 21st January 22. So he's leaving India on this day and arriving. He's coming back to India on 21st January. So for the purpose of residential status, we will include 14 as stay in India and again 21 also as stay in India. That means we will, the day he left from 1st April 2021 till 14th September 21 plus from 21st January 22 till 31st March 22. These number of days will be counted as stay in India. That means the day of arrival and the day of departure will be assumed as stay in India. It's clear? We have discussed it, of course. But if there is a case of a crew member or an employee of an Indian ship, the provisions are reversed. Technically, the day of departure, if the same question, and the day of arrival. If the question belongs to those persons, then we need to take from 1st April 2021 till 31st September 21 plus from 22nd January 22 till 31st March 22. So these will be number of days in case of a crew member. So there is a reverse provision. So we do not explain these words like day of arrival and the day of departure. We have a specific, we can say terminology for that word. We say the date of entered into the continuous discharge certificate. When they entered into the Indian ship, they have received a continuous discharge certificate. So the day they got that certificate, the day we presume that now they are outside India. So if on 14th September, he got that discharge certificate for entering into the ship. So we will not consider 14th day as stay in India. Whether the ship is in India, it does not matter. If he got the certificate on the date of 14th September, then we will think that he is in India till only 13th of September. And when he got the other certificate, that is, he is coming out of that ship. Then we got a certificate that's called signing off certificate from that voyage, from that journey. So if he got the certificate on 21st January of the certificate of, we can say the termination of that voyage. So we will not consider 21 as stay in India. We will consider that he was outside India for that day. Or we can also solve this question like this, either add these days, or you can say from 14 September till 21st of January, he was outside India. So if you, out of 365 days, you deduct these days, then also you can find out how many days he was stay in India. Or again, you can calculate it like this. Again, the answer will be same. Number of days will be same. So the day he got that certificate, if he got that certificate on 14 September and the certificate of signing off, he got on 21st January, then this duration will be treated as outside India. So automatically these 2 days will be treated as outside India. We have the provision with a solved example regarding this. Let's move on to those provisions. Go back. So after reading this provision with the example, our retention status topic is going to be end. Then we will move on to our incidence of tax. So that was the provision. A special provision, how to determine period of stay in India for an Indian citizen being a crew member. Like it's a very huge paragraph over there. But the summary is like for one line. It's just simple. The day of departure and technically the day of arrival. What we called it, the day of entrance certificate and the day of signing of certificate. Those 2 days will be considered as outside India. As simple as that. You can learn like this also for solving the numerical. In case of foreign bound ships where the destination of the voyage means journey, that journey we call is voyage, is outside India. There is uncertainty regarding the manner and the basis of determining the period of stay in India for an Indian citizen being a crew member. To remove this uncertainty, explanation 2 to section 6.1 provide that in the case of an individual being a citizen of India and a member of the crew of a foreign bound ship leaving India, the period of stay in India shall in respect of such voyage be determined in prescribed manner and subject to the prescribed condition. Prescribed manner. We did not read anything important over here. Accordingly, the CBDT has white notification number 702015 dated on 17 August 15 inserted rule number 126 explain the clarification, the notification regarding this. And this is the clarification, the technical language we were saying, from which period will be considered as outside India, because we are reading period to be excluded. That means what time should not be included as in stay in India. So it's saying the same thing. The date entered into the continuous discharge certificate in responding of joining the ship. So the day he got this certificate, that day we assume that he is outside India. And the day he got the certificate of signing off, that till that date time period will be considered as he was not in India. Rule number 126 is explained in a simple language, and here is the numerical what we were talking about. For example, if you need to find out the provision or solve a numerical, the format should be like this: total days in India 365, or in leap year 360 days, 366. And you need to find out the days from joining the ship and signing off, like from 14th September till 21st of January, 22nd of January. What was my question? Whatever it is. Those days should be deducted from the total number of days. The balance will be days as we will find out as stay in India. Example, Mr. A date of joining is 6 June 21 and signing off date is 9 December 21. This is also has been come in your examination. This is also a kind of question which has been asked in your examination. Clear? Total 365. So what we need to do? We need to exclude from 6 June till 9 December. So this time duration will be taken as outside India. And it is 187 days. So balance 178 is your days in India. So in that case, because he's a crew member, so that falls in an exceptional case. Number one, you remember when an individual citizen goes outside India for employment or as an Indian ship employee, exception one applicable. So only condition one need to be checked. And he's not fulfilling condition number one, so he or she will be called a non-resident. I hope it's clear. So we have discussed all the provision. Here is the provision for finding out whether any person is a resident or not ordinary resident. They are theoretical provision. We have condition number 1, that was 9 years you should be non-resident out of 10 preceding previous year, and less than 730 days from 7 preceding previous year. Third case was for the special category person. In diagram it's 4th point, but in the theoretical provision is 3rd number point. And 3rd point says if you are a individual special category person, then you will be called a resident and not ordinary if you fulfill condition 1, 2, or a special condition was this in India for 120 days or more, but less than 182 days. 4th is deemed resident case. Deemed resident will be always a resident and a non-ordinary resident. That's a fixed case. If somebody does not fulfill any of above 4 conditions, he or she will be called technically a resident and ordinary resident. HCF basic provision we have already done. That is now the HCF provision when HCF will be called a resident or not ordinary resident. So I have told you in that we need to check the Karta status. And in case of Karta, the condition will be opposite. That means Karta has to be resident for 2 or more years out of 10 preceding previous year, and Karta need to fulfill both. Then only HCF will be called resident and ordinary resident. If Karta is not fulfilling both of them or not fulfilling, if not fulfilling both, then in that case, that HCF will be called a resident and not ordinary resident. 2 years or more and 730 days or more, because these are reverse conditions. So if Karta did not satisfy both of the condition, HCF will be as a not ordinary resident. There are provision of companies we have already discussed. So now moving on to the concept of incidence of tax. That is, in now these concepts, you will get to know what is the effect of taxability, what is the effect on taxability of becoming a resident or ordinary resident, resident or not ordinary resident, or non-resident. Clear? So becoming a resident and ordinary resident is very dangerous for the purpose of tax liability, or you need to pay a lot of taxes if you are a resident and ordinary resident. So being a non-resident is the less tax liability in case of income tax in India. As I am not well, I am severe cold and fever taught me. So you have to be very careful about your health when there is examination or like that also, because if you are ill, you have to compromise with your studies. There's too much heat over there, 46 or 47 degree temperature in my city, and I drink cold water, chilled water, so it happened. Okay. Moving on, incidence of tax, section 5. Scope of total income. Section 5 provides that the scope of total income in terms of the residential status of the assessee, because the incidence of tax, incidence means burden, impact, taxability, fine, on any person depend upon his residential status. In the starting of this chapter, in our last session, I told you that residential status decide the tax liability, how the tax need to be collected, or on which income you need to pay tax. So it's very important to find out the residential status of a person. The scope of total income of an assessee depends upon the following 3 important considerations. What is your residential status? What is the place of accrue or receipt of income, whether actual or deemed, the point of which at the income had accrued to or was received. I'll explain you all these provisions, 3 points, one by one, just relax. Resident and ordinary resident need to pay tax on all incomes, whether you earn those income in India or outside India. So if you are a resident and ordinary resident, you have to pay tax on each and every income. How and why, I'll explain you with a diagram, with a format I have made for you. Resident but not ordinary resident need to pay income on some income, and there is a excuse me, God bless me. Okay. Resident but not ordinary resident also has some taxability and some benefit. The most benefit reside with the non-resident. If you are a non-resident, you only need to pay tax on 2 kinds of income in India. Okay. So this is the diagram. Excuse me again. So this is the format. This is the diagram we were talking about. So with the help of this diagram, I will explain you each and every point whatever just skipped above. So this is a very interesting diagram I have made for you, and very easy also, that will explain each provision one by one to you. So I have made a 4-column diagram. First one is say, or we say a table of 4 columns. Column 1 is income arise, earn, or deemed to arise or earn in India, whether received anywhere. Arise and earn means where it accrue, where you do the work, from where it has been earned. Or deemed to arise and earn. Deemed matlab assume. We need to indirectly. What is the meaning of deemed to arise or earn? That is the last topic of this session. After completing this format, there's a last topic which explains what is the meaning of deemed to earn or arise in India. So do not take tension. Do not ask me what is the meaning of deemed to arise, because we will discuss when the bridge will come. So it's a saying. We say we will cross the bridge when it will come. Tab jab hoga tab dekha jayega. So for now, we need to understand that what income is going to be taxable for which person. So first is particulars, that means income category. Second column is if you are an ordinary resident, what is going to be taxable. Third is not ordinary resident, which income is taxable for him. And last is non-resident. So if income arise or deemed to arise. So for now, for time being, you will understand income arise means directly arise from India. And deemed to arise means indirectly arise from India. What is the exactly meaning of deemed to arise? We will discuss it. So if there is any income which is arise to India or deemed to arise in India while received anywhere. So if there is this kind of income, that is going to be taxable for all, whether you are an ordinary resident, not ordinary, or non-resident. There is no differentiation. So if there is any income which is directly or indirectly arise in India, whether received anywhere, it does not matter where it is received. It received anywhere, that's going to be taxable. For example, you might be thinking, what is the meaning of that kind of income? Let me tell you the example. For example, Mr. A having a job in India. You work in Tata company in India, assume, right? And getting a salary of 5 lakh rupees per month. Okay. But he asked to his employer that this salary should be received he has a bank account in USA. So he said, I do not want to receive this salary in my Indian bank account. I want to receive this salary in my USA bank account. And employer said, okay, I'll credit your this salary into your USA bank account. So now what is happening? Where the job is being done in India, he is doing job in India, but he's received this income outside India. But where his income is arise, where his income is accrue, where his income is earning, because he's doing job in India. So technically, where his income is arising, it's arising in India. So if income is arising in India and received anywhere, it does not matter where it received. It might be received in India or outside India, does not matter. So if the income is arising in India, then on that income tax need to be paid, whether you are an ordinary, not ordinary, or a non-resident. For example, let me tell you one more example. For example, some actor or some musician or some singer comes to India for his show, etc. And he perform over here and earn 10 lakh rupees for his performance. 10 lakh is less. Suppose 1 crore rupees for his performance. Fine. So he collected that rupees 1 crore. So now he is a non-resident because he came first time in India only for 1 or 2 days, and he will never come again in this year. So he is a non-resident. But where he performed in India. So where the income arise in India, whether he received that 1 crore in India or asked him to deposit in his bank account, which is outside India. But he need to pay tax on that income in India. Okay. So that was the example of first kind of income, that if you arise or deemed to arise in India while received anywhere. Like for example, ITL is going on and a lot of foreign players is actually coming into India and play and getting the money for playing in India. So even if they ask that please deposit my money into my country bank account, Still, it does not matter because he's performing in India. He's earning that income in India, so they need to pay tax on that income in India, whether they are resident, non-resident, that is irrelevant. Clear? Now, the second case is technically the reverse case of first case. Second case says where income received or deemed to received in India. Again, what is the meaning of deemed to receive? I will explain you after the end of this topic. So income received, that means directly received in India, or income deemed to receive means indirectly received in India. Whether arise or received anywhere, whether arise or earn anywhere. So in first case, it was written that income earn or arise in India while received anywhere. In that case, you need to pay tax in India. Second says the opposite thing. If income received or deemed to received in India, but while earn arise anywhere, again, that is going to be taxable for all. Taxable, taxable, taxable. Fine. Example, let me explain you with the help of example. It's very simple again. Now, suppose Mr. W is working in Pepsi Company, USA. And again, of course, getting paid, he's getting salary of 10 lakh rupees per month. Of course, not in rupees, that must be in dollar, etc. I'm just taking the example like that. But he asked to his employer that please deposit that salary in my Indian bank account. I need to receive that salary in Indian bank. An employer said, okay, done. Let's do that. So now the income earned is outside India because the working is doing in USA. But the salary received, the income received where? In India. So again, he needs to pay tax in India, whether he's a resident or not ordinary or non-resident, does not matter. So these two conditions are very simple. You can learn these first and second point like this. If income is earned in India or income is received in India, that is going to be taxable. It does not matter whether it's received or whether it's earned, vice versa. But if any one of this condition is fulfilled, then technically that income is going to be taxable in India. Arise, earn, received. Clear? Now the third case is different. Now this says that income arise outside India and even receive outside India. Now the both condition technically outside India. Received and arise both is outside India. Received, arise both outside India. But business control from India. That's a very interesting case. So now suppose like this. Tata Company has a branch in USA. And Mr. Rahul working there and getting a salary of 10 lakh rupees per month. He earned that salary in USA because he's working in USA. Plus again, he received that salary in USA bank account. So now both is outside India, like earning and receive, both outside India. But the provision says if the income is earned outside India, if the income is received outside India, but if that business head office or its control from India, so Tata Company head office is where? It's in India. So because that business from which you are earning or receiving income is controlled from India, in that case, that income is taxable. If you are an ordinary resident, you have to pay tax on it. Even if you are a not ordinary resident in India, you have to pay tax on it. But if you are a non-resident, then you don't need to pay tax on it. So now there is a first benefit for the non-resident. I have told you, if you're a non-resident, you have benefit for the purpose in respect of paying tax in India. So this is the first advantage, because if the income is earned in India, taxable for all. If the income is received in India, taxable for all. But the arise and received outside India, but if the business is controlled from India, then only ordinary resident and not ordinary resident need to pay tax. Non-resident not need to pay any tax on that income. I hope it's clear. Now the last category income. Of course, the last category, point number 4 says now everything is outside India. Everything. Control, earning and receive. For example, now you are working in Pepsi, US. Earn outside India. You have said salary should be received in outside India. So now earning is outside, received is outside, and even control outside India because Pepsi head office is not in India. So now everything is outside India. But even if everything is outside India, like if your status is ordinary resident, then you have to pay tax on that income in India. You might be paying tax on that income also in USA, but you have to pay tax that income also in India. So in this case, you need to pay income tax in 2 countries. So do not get confused that Mr. A, Mr. So-and-so need to pay double tax. So there is a concept I have told you in my last class, double taxation avoidance agreement. There is some benefit. One country will charge tax, other will leave the tax. How it will happen? There is a separate provision in final. So do not focus on final. First focus on your intermediate group 1. Then focus on group 2, then final group 1, then final group 2. There's only 4 groups. Just it. That's it. If you clear these 4 groups, your life will be settled. You will at least getting 1 lakh rupees per month as a salary in your account. Because being a CA, you're technically going to be paid at least this much. So all my articles, those goes in job, etc. Almost 17 or 18, my articles has become chart accountant. Somebody was in Infosys, somebody is in TCS, somebody in Axis Bank, etc. They all are paying very well. At least 70, 80,000. Everyone is getting paid if you are going to the banking sector or multinational. They're very, very happy because the money they got, they're now fulfilling the dreams for their parents. They are buying car, they are buying houses, they are buying branded clothes, traveling. They are actually fulfilling all their dreams now. Now they are able to celebrate their birthday, etc. Everything. So you need to fulfill all your dreams once you achieve this target. So if you are a ordinary resident, then you need to pay tax on each and every income. It does not matter where you are earning that. If you are not a resident, you not need to pay tax. And if you're a non-resident, again, you not need to pay tax on this income, which is earned outside India, received outside India, and even controlled outside India. You not to pay any tax on this income if you are a not ordinary and non-resident. Clear? So moving on to the provision. I will take your queries after completing this topic. That was 3rd category in which income received and arise but controlled. So only 2 need to pay tax, ordinary and not ordinary. And income received and arise outside India and business also controlled from outside India. There is only taxable in case of ordinary resident. Not ordinary, not need to pay tax, and non-resident even not need to pay tax. Okay. Now the 5th point. 5th is technically not an income, but that might confuse you in the examination. So income either will be earned in India as per point number 1, or either will be received in India as per point number 2, or it will be earned outside, received outside, but controlled from India, point number 3, or everything outside India. There cannot be 5th kind of income. There will only be 4th kind of income. Either your income will fall category 1, 2, 3, 4. 5th is technically a not applicable case, not taxable. I'm not saying not taxable, it's not applicable because this is technically not to do anything with this. That is so simple. If point number 5 kind of income is being given in question, then you not need to do anything. There's the simplest thing. Don't do anything. Okay, but just understand the examiner can confuse you. They might give point number A or B kind of income and you might going to treat it like taxable or not taxable. No, you need not to say taxable or non-taxable. You have to write against this income that not applicable, or you should not do anything of that income. So what is this? Point number 5 have 2 kinds of information for you, and that is very, very important. If I am examiner, I am going to frame this point number 5 definitely in the question paper, because that will actually make me understand that how the provision has been understood by the student or just they are just reading out the provision, because point 5 is a kind of criteria which need to be solved only by those students who have technically understand the detail of the provision. So point number 5, A point is saying income of earlier year or preceding year. If in question any income has been given which is of earlier year or preceding year, we need not to do anything. Why? Because we need to only solve those category of income which relate to our current year, or we call it previous year, not preceding year. And our previous year is 21-22. So if any income has been given in question which is before 21-22 year, like financial year 20-21 income has been given on 19-20, that is not going to be have any treatment in our current year, previous year 21-22. Clear? And second is income brought or remitted into India. Again, we need to solve the question on the basis of where it is earned arise, where it has been received, where it is from control. There is no impact of from where income has been brought or remitted. Remitted means transferred. For example, if Mr. A got salary in USA of 20 lakh rupees, and now he is coming to visit India and bringing 2 lakh rupees with himself for the purpose of expenditure over here. So that 2 lakh is called brought into India, but that is not going to be taxable. You cannot tax it because he brought that income. Because he has received outside India, so you cannot tax it. If it is received in India or arise in India or if business control in India, only in that case it's going to be taxable. But if income is received outside, control outside, and arise outside, and he is a non-resident, because if he is an ordinary resident, that is going to be taxable whether he is arise received. But a non-resident, if receiving income outside India, arise outside India, control outside India, and after earning he is bringing that income with himself, that is not going to be taxable again. Understood? Okay. Let me tell you with example. I am giving you example of both the point number 5. Point number 5, point A. If it is given in question that Mr. A earned 10 lakh rupees, out of which, wait, point number 5A, if Mr. A earned 10 lakh in USA, and out of which 2 lakhs earned in preceding year, (1920). Now you have to find out how much income we need to treat if that person is a ordinary resident or not ordinary resident or non-resident. We just need to consider for our question only 8 lakh rupees, because out of these 10 lakh, 2 lakh rupees belong to the preceding year, and we did not consider any income which relate to the preceding year. So if there is any income is included in our current year income, but which is belongs to preceding year, then we should ignore it. We should exclude it for our treatment. So even if it has been said that 2 lakh rupees on which tax not paid in the preceding year, still you should not consider that income. So just ignore that income. If there is some income which has been included in your current year income, but if that income belongs to preceding year, you should exclude that income, and only the treatment of 8 lakh rupees will be done by us in the question. Again, they might give this like this also. Mr. A earned 10 lakh in USA and 2 lakh belong to earlier year. So now what amount we will treat in our preceding year? Only 10 lakh rupees. Why? Because it has been written in the first example that out of that 10 lakh, 2 lakh earned in preceding year. So that means this 2 lakh has been included in 10. Then we take only 8 lakh. But it has not been right in this question like this. It has saying that 10 lakh earned in USA and 2 lakh is extra. So total is 12. Because 2 lakh has not been given, that is out of these 10 lakhs. So we will ignore this 2 lakh and now we will treat only 10 lakh. So these kind of earlier year or preceding year income only can be given like this, whether it will be included in your income or it will be given separately. So if it is given separately, then you need to treat only 10 lakh rupees. But if it has been included in your current year, then you have to exclude and then you need to treat only 8 lakh rupees. Now the B point is saying the remittance and the brought word has no impact. For example, if it is given in question that Mr. A earned 10 lakh rupees in USA in previous year, out of which 3 lakh received in India and 1 lakh remitted to India. So now in ORR, NOR or NR, what is going to be taxable separately if need to answer? So if Mr. A earned 10 lakh rupees in USA in previous year, out of which 3 lakh received in India, if nothing is given in question and the income earned outside India, so we will consider that business also controlled from outside India. So provision says that if the income is 10 lakh rupees in USA in previous year, out of which 3 lakh received in India and 1 lakh remitted. So please ignore this 1 lakh remitted word. Suppose it has not been written in question. Ignore that remitted or brought word. We need not to do anything, need not to exclude it from anywhere. We just ignore it. So technically question is just this amount. Mr. A earned 10 lakh out of in USA in previous year, out of which 10 lakh received in USA. So in case of ORR, simple provision, all income is taxable, whether received in India, outside India, etc. does not matter. Whatever income belongs to the previous year is going to be taxable in case of ORR. So total 10 lakh is going to be taxable in case of ORR. In NOR case, only those income taxable which either, just a second, only those income going to be taxable which either received in India or arise in India or business controlled from India. So in the question, it has not been given that business controlled from India and earn outside India, then only left with the received in India. So only 3 lakh received in India. Earn is outside India. In case of NOR, we taxable only 3 income. If it is earned in India, if it is received in India, and if it is controlled in India. Because control is not given. Earn outside, but received 3 lakh. So we will taxable only 3 lakh. In case of non-resident, again, only 2 kinds of income is taxable. Arise in India and received in India. So we have received 3 lakhs. So the answer will be 10 lakh will be taxable in case of ORR, NOR 3 and NR 3 lakh rupees. I hope it's clear. This was the statement, what we were discussed, the table. So the categories of income which are deemed to accrue or arise, this is our last topic, which will discuss the category of income which are deemed to accrue or arise in India. So that kind of business income can be accrued in India, house property, one by one we will discuss as per our head of income. Let me take the queries now, and after that queries we will go for a 10-minute break, and when we will resume, in that case we will do our this deemed to arise provision. I have told you that we will discuss what is the meaning of deemed to arise income and deemed to received also. We will discuss, then we will resume after taking the queries. So let's see what queries are there, and then we will have our MCQ test. Okay. Shivani is saying, is my answer reaching to you? Okay. Vishal Agarwal now got this question. Karta eldest person family of HCF. Karta eldest co-partner in HCF. Okay. Miss Matanjali is asking, it means that, sir, an individual, we have to either follow first or second condition under HCF, we have to violate both conditions. Yes, we can say in case of individual, either we have to fulfill any one of them. First condition, 730, if any one of them fulfill, we are a NOR. But because we need to find out ROR, then we have to violate both of those conditions. That means we have to fulfill both the reverse condition. Correct. Harsh saying, sir, because we are studying CA. Okay. Course, and if it will not be tricky, then everybody can say yes. You are right. If that is that simple course, then you have no value, because whatever is difficult, that is valuable in our professional and personal life both. Matanji, conclusion is that, sir, in case of a crew member, yes. In the case of a crew member, we just need to do the opposite. In case of normal case, we have to include the day of departure and the day of arrival. But in the case of crew members, we have to exclude the both days. We need to treat the day of arrival and departure as outside India. Fine. Archie Gupta is saying that please explain this example. Archie, we are on YouTube. You can scroll back the video and you can. I will explain you again and again how many times you want. Okay. Next is 3 CMA. Why are you asking me this, Miss Chaurasia Pankaj? Next is Archie is asking what word is used by you in lieu of journey. Journey means voyage. Voyage means a journey from one port to another port. Meaning of voyage, I just explained you. It's a meaning of journey from India to outside India and coming back. So in case of when we travel by ship, so we technically call that voyage, and we call the ship like a vessel, etc. Mr. Rashim Kumar Majthia is asking, sir, if ship depart after say some time, 2 days due to some reason, it does not matter when the ship technically depart. The date is written on certificate. We will consider at that day you are outside India. It does not matter the day, the real day when the ship technically departed. Okay, Ramashankar saying, get well soon, sir. I pray for you. Thank you so much. Thank you. Anu Gupta is saying, take care and get well soon. Thank you so much, Anu. Janisha is saying, sir, here in Bangalore, it is less than 22 degrees and it's so cold. Seriously, I think I should shift to Bangalore. It's a beautiful city and beautiful weather. I'm coming. I'm coming to Bangalore. Don't worry. Find a place for me. Okay. So, Matanjali, income earned in India is so taxable. Yes. If you earn income in India, then it's going to be taxable irrespective of your residential status. If you earn income in India or receive that income in India. Okay, Madhuri Nikhare is saying Justin Bieber, whatever it is, Justin Bieber, Enrique, anyone. Okay, Archie Gupta is saying, sir, if a person come for visiting only for a week, then he may not need to pay tax. Correct. So, some students were asking me the question in the last session, so what will happen if a non-resident is in India, whether he need to pay tax? So, tax need to be paid when there is income earned in India. So, if some non-resident is coming to India, but he is not earning any income in India, not receiving any income in India, so there is no need to pay tax in India. But if he or she became ordinary resident, then he or she need to pay tax on all income, whether he or she is earning outside India or earning in India. Got it? Okay. So Milton Kumar saying, sir, take some garlic with water for immediate relief from cold naturally. Thank you for your advice. I'm definitely going to try it. Thank you for your advice. Okay, I'm so emotional. Thank you. Next is any exemption from the first two condition. Rashim Kumar is asking. What condition exemption you are asking? Please tell me. First two condition. There is no technically exemption. I think you are asking that is there any income which is not taxable if that is earning in India or received in India? No. The all income is going to be taxable if they do not include in chapter number 3, like if it's not an agricultural income. Agriculture income is exempt, whether you are earning it from India. So there are certain income, those are partially or fully exempt. So if your income does not fall in that category, then there is no criteria, no condition, then you can escape from tax. Next, sir, when Raghavan is asking, sir, when earn outside India, what is the company outside India deducted TDS? Will it again tax in India? TDS is a different case technically. If your company deduct TDS, that's a kind of tax deduct in advance. So whenever you will file income tax return in India, then the tax, whatever has been deducted from your income, can be refunded to you or will be deducted from your tax liability. So TDS concept, let's not discuss it right now because it's a separate concept. You might get confused. So the time will come when you will be able to understand the provision of TDS in your future chapter. So when you will understand that topic, you will come to know what we were discussing. Anu Gupta is asking, sir, then a single income will be taxed 2 times, one in own country and also in India. No, it's not like that. Technically, you can say yes, but there I've told you in the last class also. Whenever it will happen that income is taxable in 2 countries, there are separate provision for it. When you will be in final, you will get that. That's a double taxation avoidance provision. Okay. Vishal, okay, it's amazing explanation. Thank you. Matanjali, you motivate us very much. Thank you, sir, for the motivation because I belongs to you. I was not an intelligent student. I have told you, the very, very average. You can say below average. Oh, I should not say this, but how much punishment I got from my school life that you can't even imagine. And just because of study, because I was not very good in study, I've always been playing cricket and games and etc. So I've got punishment at my home from my mom, a lot of punishment. And in school, every teacher give me punishment. So if my kind of student can done CA so easily, you can say, because I never thought CA a difficult course because I understood one thing, that if you need to fulfill your dream, if you need to have money and you need to fulfill your dream, I have to complete this course. And the day I realized that study or education change your life. This is so true. Education can change your entire life. This is the simplest thing with the help of which you can entirely change your life and your family lives. From that day when I realized that, CA was not that difficult because I was determined. I have to be a CA. I have to become a CA as soon as possible. That was the only aim I had for 3 years, and I completed it. Fine. Next is Harsh is asking, sir, if we give group 1 in November and then group 2 in May 2023, then so will it count as first attempt or second attempt? Why are you asking these kind of questions? I told you, this is called not focused. We are discussing here the income tax provision. Please ask only those questions related to this topic. These kind of questions you can search on Google or ask to the institute or whatever you want. So we have a limited time to cover all this topic. I have a limited time to cover the topic. I have a limited time to make this study interesting. I have the limited time to motivate yourself. So let me waste my energy, or you can say use that energy for these kind of answers. Okay. So please, I request do not ask these kind of questions. Vishal, income arising outside India from a business connection in India, what will be its treatment? I'll explain you the meaning of business connection. What is the meaning of business connection? That's the only topic left for this chapter. Sir, if I have received income in current year, Harsh is asking, which is outside last year, then it is not taxable. If you have earned any income outside India last year, and if you are getting that income, that cannot be received because it already received last year. It will be called remitted or brought. It will have no treatment in current year. Okay. So I've explained it, Mr. Harsh. Okay. Puja is 8 lakh, 8 lakh, 8 lakh. Okay, I've explained this. Next is, sir, if it so then people may by getting his income in next year so that he can escape from tax. If department find that income, you need to pay tax plus interest and minimum 100% penalty and maximum 300% penalty. So you might escape from an income, but if department find that in future, then you can't even imagine how much amount of tax and penalty you need to pay. So if you have courage to do that, go for it. Okay, so Matanjali is asking in B examples are only 9 lakh he taxable hoga because 1 lakh is remitted. Remitted is no treatment. I told you ignore that remitted because remitted is also received now. So that is already included in 10 lakh provision. So 10 lakh is remittance does not have treatment like preceding year income. If it is preceding year income which is included in your previous year, that is need to be included. You do not need to read the line which is say remitted or brought. Ignore that line. So you will never get confused. That is the way what you will do wrong in your examination if you read that remitted word. Okay. Okay. Next is income arise in preceding year. Preceding. If sold in India will be taxed in current previous year. In preceding year, treatment will be held in preceding year. In the previous year, will not do any treatment of preceding year or earlier year income. Vishal saying, sir, now after revising once, I can explain this topic. Congratulations. You can also be a faculty of CA Institute. Then you will be a CA. Very good. Okay, Shweta Jain, sir. So for 5A example, nothing is taxable to anyone. No, I'm not saying that. I was explained to you in the 5A. If you have 10 lakh rupees income earned USA and 2 lakh is including preceding year, then we will treat only 8 lakh. That 8 lakh will be taxable full for ordinary resident. And if it's not given that where it is received, we will consider received outside India and business control also from outside India. So 8 lakh will be in ordinary resident only, in not ordinary resident 0, in non-resident 0. So I didn't solve that example. I just explained you. In that case, how much income we will treat for our solution. I did not solve it. Okay. So Manoj Kumar asking, sir, Mr. X is a foreign citizen. He came to India for visit. The money that he take is completed that he asked his friend and the money deposited Indian bank then. If any tax incurred on that money? No, he did not earn that income. He just received from his friend as a loan or etc. But if he proved that the friend gave him for his some work as an income, then only that is going to be taxable. But if take that money from his friend as a loan etc., that's not going to be taxable. Okay, Vishal is a bit voyage concept in relation with that. Nautical mile concept you not need to understand. In the examination, it will be given. Voyage starting date, voyage signing off date. You just need to exclude those days. As stay in India definition, it will be solved. Need not to go through the technical thing of nautical mile, etc. And if you want to understand the nautical mile concept, just Google it. What is the meaning of nautical mile? They'll explain you everything. But that is again not relevant for the purpose of our examination. Nobody is going to ask you what is the concept of nautical mile now. Okay, next is which city I belong? I belongs to Agra, Uttar Pradesh, the city of Taj Mahal, 47 degree of temperature. It's everything burning over here. Siddhapa Kambal is asking, sir, can you give your contact number? No, not allowed. I can't give you. Of course, Board of Study does not allow us to interact with the students directly. So, Siddhapa Kambale, teaching method more beautiful. Thank you so much. Menon is saying, sir, please tell which question write first examination. These are not the question to be asked for the topic. Only those questions need to be answered first. What you confident that you know these questions correctly. Attempt those questions. Try to attempt those questions firstly. If agriculture income and outside India, that's going to be taxable. Only agriculture income in India is going to be exempted. We will have the third chapter in which we will discuss detail in the topic of agricultural income, section 2(1)(a). Rashim Kumar Majiti asking, I read somewhere that for the ordinary purpose, okay, time is getting. So I'll take the rest query after the break. So we will for a 10-minute breaks, and when we will resume, I'll take the queries, the MCQ, and the remaining topic. We will continue. So Mr. Ram, can we go for Welcome back, students. I hope you have taken your coffee or tea. I just had my tea and I'm feeling better, but voice is getting bad. Okay. So the queries I have we were just discussing query number 167. Rashim Kumar is asking, I read somewhere that for ordinary resident working in Gulf country was exempted from taxation. I don't know it's true or not. If you are an ordinary resident in India, in that case, you are earning anywhere in this world, you need to pay tax. So that's wrong. Might be there's some other condition might be possible. But the question you are asking regarding that, I can say no. That's a false. You need to pay tax in India. Riya Doshi, the surcharge rate of case 2 long-term cap gain dividend is applicable to non-resident also. Surcharge rate of case 2, what is the case 2? I don't understand what you are asking, Riya. Please ask in detail. Siddharth is saying, sir, I want to learn GST from you. It's not my in hand, of course. Rajiv Kumar, you are taking classes, current condition at self-motivation. Thank you so much. It's all about learning. Okay. Mahadev. Sir, IPL learning income for section 174 and tax. No, because they are not organizing the event. They are just a performer. So if they are coming into India, earning an income and going back, then they have some agent in India. Those taking responsibility of paying tax. So if there is someone who's taking responsibility to pay tax on their income, then they can leave without paying tax. But if it is not so, then yes, they have to pay tax before leaving from India. Akash Neil is answering, sir, is my understanding of the last question, 10 lakh taxable to ORR? Yes, correct. The correct answer we have just given, 10 lakhs for 7 and 3, and 3 lakh for NOR and 3 lakh for non-resident. Well done. Very good. Nothing wrong in your answer. Okay, next is, so Neha is asking, Neha Murarka is asking, sir, income of Indian embassy fall in which category? What is this question? The person, those work in Indian embassy, like an ambassador who has not received salary but accrued so, he has to pay tax. Yes, in case of salary, you need to pay tax on accrual basis. That you will be going to understand in the salary chapter. But from what money he will pay tax since he has not received it. So you need to pay tax in assessment year, not in the previous year. So I hope that if you are an employee, you have to collect the income at least for the previous year till the assessment year comes. But even if you are not able to receive that income, it's your problem. Department has nothing to do with it. Department will ask tax from you. You have to pay tax from you, or department will recover it from its own procedure. Okay, next is Archie Gupta asking, sir, what about tax on interest received on loans, share, etc.? That will form part of income from other sources. So tax liability will be calculated as per the slab rate, etc. Okay, trick for learning section. Okay, fine. I'll tell you the trick for learning section now, because I don't want that this topic has been completed and I forgot to tell you the trick to learning section. So the real trick for learning the section, it's very simple. And whatever I'm going to tell you, believe me, this is true. I have learned like this, and I have learned all the section on my tips when I was given examination. And this trick works whether it's a company law question, it's sections, income tax, or whatever subject you are thinking about. And it will always work till your final level or whatever it is. It's a very simple trick. Might be you are doing in with some other respect also. So take a paper, A4 paper like this, and like a book, like I will explain you the whiteboard how to learn sections. A very simple trick. It will take 1 minute. Just write down the sections. Like if I'm talking about the income tax, you just take a A4 size paper, divide into 3 columns. Just write it down first point. Section 4, that is charging section. You have to write this much only. Section 4 is charging section of income tax. So you have to write it down from the initial. So take out the notes or study material, and those section you want to learn for your examination. Write it down one by one. Section 4, Section 6, that is for normal resident. Then Section 6(1)(a), that is for deemed resident. So you have to make a format, take a paper and write down the section like this. So I guess in an A4 size paper, almost in a single page, if you're making 3 columns, almost 50 or more than 50 section will be on one paper only. And now what you need to do, you need to paste this paper on your wall. In which room you study, paste this paper on any wall of your room or wherever you study. Paste it over there. And you need to do what? And every day, you just need to give 2 or 3 minutes for starting 5 or 10 section. Whenever you are doing brush, etc., or whenever you are free, just go in front of that paper. Just look at to the paper and just read 5 or 10 sections. Section 4, charging section. Section 6, resident. Section 618, deemed resident. Like this, you need to just read it. Do not try to learn them. Just read it. And what will happen if you read 10 sections today and tomorrow and a day after tomorrow? That means 3 days or only 2 or 3 minutes. You will give in 2 or 3 minutes. You will learn all these 10 sections. Why and how? This is the special power of our brain, which scientists call photogenic memory. Whenever you see something like a movie, like a picture, it automatically pastes in your brain without even you try to learn it. As you see some movie or some trailer of a movie, you automatically learn, you automatically remember that without even try to remember. You remember songs, you remember movie, you remember the dialogues, etc. automatically. How? Because it's our brain power. When it sees something, it automatically work to collect it, to download it. Without even we ask it to download, it download the thing. And the best part, why I'm asking you to paste it, because that is only happen when you are seeing something like a photo. So when you see that picture for 3 days, and then whenever you want to recall it, you just need to imagine about that picture. You just think about it, and automatically you will see the section that yes, it is actually pasted in my brain. It actually happens. I'm not joking. If any one of you thinking that no, that cannot be a real trick, it's a real trick. You just do one thing. Okay, do not waste much time. Just write down 10 sections and paste it on your wall today, tonight, or tomorrow. And just give it 2 minutes a day, 2 or 3 minutes, and just do not learn it. Just try to read them and see them. And after 2 days, you will see you automatically that section picture will be pasted in your brain whenever you want. You will see that yes, these are 10 sections, and this section belongs to this topic, this section belongs to this. Try this, it will work. I promise it will work. So if any one of you try this, let me know in my next session that it worked for you or not. It will work if your brain is in the right condition. If your brain is working properly, it will work. It will work. Trust me. So next, moving on to the provision, we have our last topic to complete, and that is income arises or deemed to arise in India. And after that, we will take an MCQ test if we have left with enough time, because I am not well. So I just wanted that this topic should be completed. And if we are not able to conduct the MCQ test, we will conduct in the starting of our next session. So that is left in the incidence of tax, section 5. There is first point which says income arises or deemed to arise in India. And the second was income received or deemed to receive in India. So what is the meaning of deemed to arise, etc.? One by one, under each head, we are going to learn it. First is, we have 5 head of income: salary head, business head, house property head, capital gain head, and income from other sources. So first we are studying about the PGBP head. That means business head. That is income from business connection. So it says any income which is from business connection will treat as deemed to arise in India. How it will work, what kind of condition we need to study in that. Let me explain you with the help of a diagram. So in case of PGBP, it says it is a non-resident which reside outside India, for example, in the USA. Mr. W is reside in USA for the purpose of India. He is a technically non-resident. So if he is running a business in India, he is opening the head office or holding company of any business in India. So he is dealing in India, he is selling his goods in India and getting income. So that income will called income arise from India. That is directly from India because he is running a head office or holding company in India. So that is not deemed to arise. That is a case of arise in India. So he need to pay tax on it because this income will fall as arise in India. And even if he is a non-resident need to pay tax whether his income arises from it. If his income is arise or earn from India, then he need to pay tax on it. So to avoid this, what he decided that I will not open a head office or holding company in India. I will open a branch. Head office will be in USA, branch will be in India, or a subsidiary. I will do business via a subsidiary company or a branch. And again, they will do the same thing. They will sell my product. I will get the income. So that income will not fall in the category of taxable because that is not covered in arise in India. But government include it as deemed to arise in India. And deemed to has the same meaning, the same implication, sorry, which is for arise in India. So in that case, that is going to be taxable. So the branch, if a non-resident have a branch or subsidiary in India, that is considered as a deemed to arise, or we can say that is considered as a business connection from India. And if there is a business connection from India, that income is called deemed to arise in India, that is going to be taxable. So now he cannot escape his liability by opening a branch in India. So he thought, let's do one thing. Let's open a agency in India. Government also include the agency in the definition of deemed to arise in India. So even if you are opening a branch or a subsidiary or an agency, that is again will be considered as deemed to arise in India. So again, that is going to be taxable. So now he thinks, let's do something else to escape this income. So he said, I will appoint a person in India and on behalf of that person, the person will work. He will collect order from India for me or deliver goods on behalf of me. I will not appoint him as an agent or agency because if I appointed him as an agent or agency, then he or she will be fall in the above category. So he or she need to pay tax. Just a second. So I'll appoint a person who will just do two things. He will collect order on my behalf and he will do both work, order and delivery of goods on my behalf to the customer. So I'll not treat him as an agency. I just appoint that person and customer will do payment to him and he will transfer that payment to me. So that will not fall in the category of holding, head office, branch, subsidiary or agency. So that income is not going to be taxable because that is not be treated as deemed to arise or deemed to receive because arise is not included in above three category and I will receive that income outside India. But government include this also in the definition of deemed to arise now. So this is also cannot escape his tax liability. So he decided that I will appoint a person same and he just received order for me. Excuse me, cold is getting worse. Sorry. So he will just receive order on my behalf and goods I will deliver on myself and receive the payment myself or via him. So he will do only order work on behalf of me. Again, department included as a business connection going to be taxable. And he say, okay, order I will collect. He just deliver goods on my behalf. Only goods deliver work will be done by him. Again, this is also included as deemed to arise definition. So there is a two case of this category, order and delivery of goods. Both you are working. Again, you are a deemed to arise. If you are only receiving order from some person, again, that is called a business connection from that person, deemed to arise taxable. If only goods delivery work has been done by that person, again, also that's a part of business connection going to be taxable. So in three cases, these will be treated as a business correction if this work has been done by regularly or habitually. If it is done by one-time transaction, it will not be treated as a business connection. But if it is done habitually or regularly, in that case, that will be treated as a business connection. For example, Mr. A in USA, who is a non-resident. Mr. B is a resident. He is in India. And C is a friend of B. He is also in India. They both are resident. So C asked B कि please ask your friend Mr. A to send a laptop to me. I'll pay. So B asked his friend Mr. A, send a laptop. B sent a laptop to B for rupees 45,000. And B told Mr. C and deliver this to Mr. C for rupees 45,000, and payment given by C has been transferred to Mr. A. So in that case, this transaction is not habitually, it's a one-time transaction, not regular. So this will not cover in this concept of business connection. So in this case number 4, 5 or 6, that should be habitual or regular base to become business connection. And in that case only, the income will be treated as deemed to arise in India. The term business connection includes follows: maintaining a branch office, maintaining a subsidiary company, appointing an agency, any financial association, a person who habitually concludes order and delivery, a person who habitually maintained in India a stock and only deliver, a person habitually secured order. So from point number 5, if it is doing both work, order and delivery, or if it's doing only delivery words or only considering taking order, they all 3 points connected to each other, almost same. So if this connection also established, in that case also it will be treated as deemed to arise in and going to be taxable in the hands of a non-resident. Correct? There are some more also. In the case of a non-resident, the following shall not. There are some exception also. In case of non-resident, there are some cases in which business connection will not be treated as a business connection. There are business operation in India, but we will not consider it as a business connection. So that part of income will not be taxable. In the case of a business in respect of which all the operations are not carried out in India. In this case, a business of which all the operations are not carried out in India, the income of the business deemed to accrue or arise in India shall be only such part. Now, what it is saying? For example, there is a car manufacturing company that is work in US. Clear? And it's a whole business activity has been done in USA. All manufacturing operation, etc., has been done in USA, and the car is exclusively sold in USA only. There is no car sale in India. So just take a company like, we can say, ABC car, and all the manufacturing operation has been done in USA, except manufacturing of tire. For the manufacturing of tire, technically, they open a manufacturing unit in India. So only tire has been manufactured in India, and after manufacturing, it has been exported to that factory. Tire has been assembled into the car, and car is going to be sold exclusively in US. So now what happened? Because in India, there is only one part has been manufactured, and that is tire. The whole operation is not conducted in India. Only a single part, a small part of that operation has been done in India. And even that tire has not sold in India. It has been exported to that country. So when the car has been sold in USA, the income tax cannot say that you should pay tax on the profit earned on sale of that car. For each car, assume the company earn a profit on sale of each car is 20 lakh rupees. So Indian government cannot ask that you have conducted the operation of manufacturing of tire in India. So that's a business connection, of course. So need to pay tax on 20 lakh in Indian also, because that 20 lakh will be deemed to arise in India. No, it says if any manufacturing operation, but not whole, a part is manufactured in India, then government cannot ask tax on the whole 20 lakh rupees profit, but they can ask for the proportionate part which belongs to that manufacturing operation of that part in India. How it will be calculated, it depends upon the different cases, how it will be calculated. But for the time being, I can make you understand like this, that if a tire cost is 5% in the car, then whatever 20 lakh rupees is the profit on selling of that car, then 5% of that 20 lakh can be called a deemed to accrue rise in India. only that deemed to arise need to pay tax in India. Understand? It's genuine case. So if all business operation is not carrying on in India, then we can say that we will take only that part of operational income which has been done in India and which is proportionately can be taken. So it has been written that the income of the business deemed to actualize in India shall be only such part of income as is reasonably attributable. So whatever percentage will be charged, that will be decided by the income tax department. I have just given you an example. In that case, there is a business connection, but partial business connection. So in that case, whole profit is not going to be taxable. The partial profit need to be taxable in India. It's a very simple thing. Okay. Next. Second point again, purchase of goods from India for export will not fall in the definition of deemed to arise at all. What it is saying, suppose there is Mr. A non-resident who reside in USA, dealing in shoe business. What is does he purchased, not sale, he purchased shoes from India worth rupees 10 crore. He purchased it from Mr. B, who is a resident in India, of course. So he purchased 10 crore rupees shoes from Mr. B India and sold it for rupees 16 crore in UK. So he earned, or suppose, net profit of 4 crore rupees. Do not say 6 crore rupees. Nobody will write me, sir, profit is 6 crore. No, there is other expenditure also. So it cannot be said that 16 crore and 10 crore profit is 6 crore. No, don't do this. This will be done by a BCom student, not CA students. So profit cannot be 6 crore like this. There will be other expenditure also. So we are taking assumed profit is 4 crore. So now income tax department cannot ask for tax on this 4 crore. They cannot say that is a business connection because you have purchased goods from us. So that is business connection from India? No. Because in this case, they just did trading. In the car tire case, they were doing manufacturing in India. So proportionate part can be asked for tax treatment. But in case of trading, if somebody's purchased from goods in India and sold it outside India and earn income, then this is not a case of deemed to arise in India. Because he just purchased, technically he paid 10 crore to Mr. B. So that will be Mr. B's sale. And automatically whatever expenses Mr. B have done. So from this 10 crore sale, whatever profit Mr. B is earning, he is going to pay tax in India because he is the person who got the money. But Mr. A technically did not get any money from India. He just purchased it. So you should understand, if non-resident manufacturing in India, then proportionate income can be treated as deemed to arise in India. But if non-resident purchase only in trading, purchase from India, then in case whatever property earned, that will be outside the purview of deemed to arise in Indian concept. I hope it's clear. Next, that is purchase of goods in India for exporting. Third one is collection of news and views in India for transmission out of India. So if some news agencies or some news journalists, we can say, comes to India, collect the news and transmit it outside India. They does not transmit it into India. And in that case, because earning is not from India, they just shooting etc. in India and technically transmitted outside India, then there is no income arises from India. So there will be no tax liability. In case of a non-resident, being a person engaged in the business of running a news agency or of publishing paper, magazine or journals, no income shall be deemed to accrue or arise in India to him through or from activities which are confined to the collection of news and views in India for transmission out of India. So that is, again, you cannot say a business, it is a business connection, but it is not a business connection for the purpose of taxability. Last exception for non-resident, in which business connection is there, but there is no income taxability. Okay. Shooting of cinematographic films in India. Now what is happening? In the above case, there was news collection. Now what is happening? Somebody is coming to India for shooting his film. As I guess MI6, Mission Impossible 6, Tom Cruise and his team came to India for shooting in like Himalayas or somewhere else for this movie. I don't know, it was 6 or 7 or MI4, whatever series it was. So there is cases when outside countries, cinematographer or producer comes to India for shooting, etc., for a movie, etc. They shoot it over here and release outside India. If they are releasing it in India, then income directly arises from India. That is going to be taxable. But now we are imagining a condition where only shooting has been done in India and all the releasing has been outside India. No release, no income from India. In that case, there will be no tax. In case of non-resident, no income shall be deemed to arise in India through or from operation which are confined to the shooting of any cinematograph film in India. But there is a special condition if such non-resident is. It has some special condition. Condition is, in case of news agency, there is no condition. In case of export, trading, there is no condition. But if there is shooting of film in India, and releasing. So if they release that movie in India, then there is no confusion that is going to be taxable because they are technically earning income from Indian sources. But we are talking about if they are releasing outside India, then income tax say no income shall be treated as deemed to arise. That means not is going to be taxable if following condition has been fulfilled. Following condition says the producer, the owner of a movie is called producer. The producer, if he or she is an individual, if the producer is individual, then he or she should be non-resident in India in that previous year and non-citizen also. So if they are non-resident and non-citizen both, then the income earned by releasing it outside India is not going to be taxable. But if they are either resident in India or citizen, then the income arises from releasing outside India is again going to taxable. So that is a very special condition. If the producer is a partnership firm, then all partners should be non-resident, non-citizen. If any of them is becoming a non-resident or a citizen, then that income arises outside India will be treated as deemed to arise in India. And if it is a company, then who is the owner of company? All shareholder will be non-resident and non-citizen. Even if one of them become citizen, then the income will be treated as deemed to arise in India. But understand, even if this condition violate, the income will be treated as deemed to arise in India, but not full income. Because again, we will see like that. How much part has been shooted in India? Proportionate part which has been shooted in India, that might be going to be taxable depending upon the case of the facts. So that is the case. That is again a business connection in India, but not going to taxable if you fulfill these conditions. These are the condition: individual, not a citizen of India, non-resident. Again, for partnership firm, non-resident, non-citizen. And again, for company, non-resident, non-citizen. Individual is not a citizen of India, plus non-resident, of course. So in case of PG business head, we have understand what will be treated as business connection. Those will fall in the category of business connection will be called deemed to arise in India. And what will not be considered as a business connection. Okay. In case of income from house property situated in India, then any income arises therefrom is deemed to accrue from India. So if you have a house property in India, is a building in India, and you are getting rent of that income even outside India, that will be called deemed to arise in India. Okay. Very simple was. In case of capital S, excuse me again. It's getting worse. Okay. Income through transfer of a capital asset situated in India. So now we are talking about the capital gain concept. So when capital gain is going to be treated as deemed to arise in India? Very simple. Capital gain arising through the transfer, because you have not discussed the capital gain chapter till now. It is a separate chapter. You will be going to understand when the faculty will take the class of capital gain. So this point will be very easy when you understand the concept of capital gain, because there are some terms which you do not know now. What is the meaning of capital asset? What is the meaning of transfer, etc. So we are just reading it over here, but you will understand this automatically when you will going to understand the chapter of capital gain. Capital gain arising through the transfer of a capital asset situated in India would be deemed to accrue or arise in India in all cases, irrespective of the fact whether the capital asset is movable, immobile. If the asset is in India, then it's going to be taxable whenever you transfer that asset. The place of registration of the document, that is again irrelevant. If the asset is in India, that's going to be taxable, capital gain. The place of payment where it is, it does not matter. So if there is a capital asset in India and there is a transfer, then the income will be treated as deemed to arise in India. Income under the head salary. We have two cases in this situation. Salary for leave period. Earlier, what was happening? I need to tell you the example that. Okay. In case of salary income, what was happening? There was a tax planning was there. Like if Mr. Z, a foreign citizen, a non-resident in India, he comes to do job in India. And what was happening? That he is getting salary in India. He is coming for 5 months job in India. Only 5 months. Company hired him for 5 months job in a year. So he is getting salary 10 lakh rupees per month. Now what happened? For 5 months, he has been paid 10 lakh rupees. That means 50 lakh rupees. And after doing 5-month job, he went outside India for leave. Or we can say on leave. He went outside India for leave of 7 will be treated as arise in India as well as received in India, because he was working in India for 5 months. Now understand, because he's only for 5 months in India, so he will become non-resident for this year. Because he was firstly came into India. He's a foreign citizen. Both conditions will apply. More than 182 days, he is not fulfilling it. More than 60 he is fulfilling, but he is coming for first time in India. So 365 days condition will not be fulfilled. So he will still be a non-resident in this year. For a non-resident, only 2 incomes are taxable, which is arise or deemed to arise in India, or which is received or deemed to received in India. Only arise and received is taxable. So now when we come to the taxability of this income, then in this case, 50 lakhs will be taxable as this is arise as well as received in India. But when you will try to tax 70 lakh rupees, you cannot tax it. Earlier you were not able to tax it because 70 lakhs he has received outside India. So that is not received in India. And because he is on leave, so technically he was not working. So he did not earn in India because he was not working in India. And because he received outside India, so this is going to be non-taxable. So he only needs to pay tax on 50 lakh. So it became a practice. If whenever somebody comes to India from outside for some month, 3 months, 4 months, 5 months of working, in that case, company pay him some amount of salary when he is in India and some amount when he is on leave. So that leave period salary won't be taxable because he is still a non-resident, and leave period salary will not fall in the category of deemed to arise or deemed to receive. So that has been an income avoidance case due to tax planning. So what government has done? Now government has amended the provision. Income tax said leave period salary will be considered now as deemed to arise. So this is arise, but this we will treat as deemed to arise. So any leave period salary now received anywhere will be treated as deemed to arise. That means, what does it mean? That means that now he needs to pay tax on total 1.20 lakh rupees. So the concept says leave period salary will also be treated as deemed to arise salary. So now that tax planning has been stopped by the government. You should read this paragraph. Okay, I have explained you with example. Second point says salary received by a citizen of India from the government of India outside India is deemed to accrue or arise in India. So if you are a government employee and a citizen of India, like ambassador, like you are a government citizen of Indian government and you are working in Japan embassy, and Indian government is paying you salary in Japan. So what will happen? You will reside in Japan. You will become a non-resident because most of the time of the year you will be in Japan. So you are not going to fulfill any basic condition as well as other conditions. So if you have appointed as an ambassador in Japan, you will be a non-resident of India. So only two kind of income will be taxable: arise in India or received. Now government of India pay you salary and that is also in Japan. So income will be received outside India, and because you are working in Japan, so earn also outside India. So technically this income is not going to taxable because you are not even earning in India because you are working in Japan, and the amount of salary also you are getting in received in Japan. So that income is not going to be taxable earlier, but income tax made an amendment and said because the payment has been made by government of India. If it has been done by a private company, you are not going to pay any tax. But if a government employee who is a citizen of India received any salary from government even outside India, we will treat it as a deemed to accrue or arise in India. That is going to be taxable in the hands of receiver as a deemed to arise in India. Clear? Now the last is income from other source concept. In income from other source, dividend interest paid by domestic company outside India is deemed to arise in India. If you are a domestic company and if your shareholder is outside India and you are paying dividend on the shares or interest on debenture, etc., to them, even outside India, even in that case, that dividend and interest will be treated as deemed to arise in the hands of the receiver and is going to be taxable. Next, royalty income or fees or interest income received from the following person deemed to arise in India. If you are receiving royalty, fees or interest income from India, but the receiver, the payer person is central government, etc., then again that income will be treated as deemed to arise in India. Let me tell you how, with the help of example. It's technically almost the last topic, or we can say the last section, or the last. After that, I'll try if I'm able to take your MCQ test. I'll definitely want to take your MCQ test because problems are everywhere. Even I am not well, might be you will be not well in your examination time, but you should be determined. Yes, I will do this thing. So problem will be here or there. You cannot give any excuse for your failure. You should try your best. Try just your best. That best that you can say, yes, this is my best. I cannot do more than this. The day you will achieve this feeling that this is your best and you cannot do more than this, in that day, you will achieve that thing. If you are giving your examination of CA and if you are committed to yourself and you are true to yourself and you decided, yes, this is my full hard work, 100%, I cannot do more than that. That attempt you will clear. That's for sure. Okay. So we were discussing about the income from other source concept. There is a concept related to royalty income, etc. Like Mr. J is a non-resident for India. He lives in USA. Okay. Now what is happening? Mr. J is receiving income from India, royalty income or interest receiving from India or fees receiving from India. So he is receiving any of them or all of them from India. Why he is receiving them? Because royalty received, because he must have been given into India to someone, some kind of copyright or lease, because royalty is received against copyright, patent, etc. or in case of lease. He is receiving interest because he has given to someone in India loan. He is receiving fees because he has given to someone in India any technical or professional service. We can say in general terms service. Okay? So he is provided in India someone to lease or copyright, loan, etc. That's why he is receiving royalty, interest, or fees. Now, what is the concept? What is the topic what we are discussing? The payer who is paying this royalty or interest or fees to him. The payer might be either the government, central government or state government, etc. So might be central government has taken any kind of license from him, that's why they are paying royalty. Central government take any kind of loan, that's why they pay interest. Central government has taken any kind of service from him, that's why they are paying fees to him. So if the payer is central government, then these income will be considered as income deemed to arise from India. All of three, any one of them, deemed to arise. So if this is deemed to arise for non-resident, what will happen? This is going to be taxable. He cannot escape from tax because the payer is government. But if the payer is not government, if it is any other person other than government from India, any person other than government, whether he is resident or non-resident does not matter. So the payer is resident, non-resident, anyone, but any other person, then the concept says that if that copyright, loan or service against which he is paying royalty, interest or fees. So if the payer is any other person and used that copyright, loan or service, if he used that thing in India, in that case, that royalty, etc. will be called deemed to arise from India and going to be taxable for Mr. J. If that resident or non-resident used copyright or lease or loan or service in India, but if he used these things outside India, if he used that loan for his business which is in Bangladesh or Afghanistan, not Afghanistan, there is no business, okay, in China, no, not China, okay, Japan, etc., anything else, okay? So if he used that royalty, copyright, loan, etc. outside India, then that royalty, interest and fees will not be treated as deemed to arise in India. That will not be treated as deemed to arise in India. So we have to see, in case of central government, state government, you do not check anything. It will be deemed to arise for Mr. J. But if there is any other person, then we need to check that if these royalty, interest and fees against copyright, loan and technical service, if used in India, then in case that income will be treated as deemed to arise for Mr. J. Otherwise not. For example, Mr. J gives 50 lakh rupees loan to Mr. A in India. He used this 50 lakh rupees loan for his business in India, in his factory in India. And now the interest of 10 lakh rupees has been paid to Mr. J. Then this 10 lakh will be treated as deemed to arise in India. Simple. If Mr. A used this 50 lakh rupees loan in his Bangladesh business, not in Indian, and pays 10 lakh rupees to Mr. J, now this 10 lakh will not be treated as deemed to arise for the point of view of Indian income tax. Bangladesh will ask for tax on that income, but for the Indian income tax purpose, this 10 lakh will not be treated as deemed to arise because the loan has not been used in India. It might be happen that 10 lakh out of 50 lakh, 30 lakh loan used in India and 20 lakh used in Bangladesh. and pay 10 lakh rupees, then proportionate value of interest will be treated as deemed to arise in India. And the balance which is used in Bangladesh, that part of interest will not be treated as deemed to arise in India. I hope it's clear. It's simple. So this is the concept of income from other source. You can read it, of course. Now I have explained the example. Now the last was income deemed to received in India. Income deemed to received in India. What is the meaning of deemed to received in India? That you will study in future chapters. Like deemed to received in India has some example. In case of contribution to RPF, RPF is Recognized Provident Fund. That you will going to study in salary chapter. So why RPF is called deemed to receive? I cannot explain it over here because that's a different concept of RPF. When you will read RPF concept, you will come to know why it is called deemed to receive. Again, the contribution made by central government under section 80 CCD. That is a deduction under section 80 CCD. Why this is called deemed to receive? You will come understand that when you will study deduction chapter. TDS is also treated as deemed to receive. Why it is deemed to receive? You will understand in TDS chapter. Only fourth point we have discussed in basic concept chapter. You will understand these are treated as deemed to be received in India. That is a black money case. Section 68, 69, 69, A, B, C and D also. That is a Hundi case also. So in these cases, 69D also there. So these are black money cases. In case of black money, it is assumed that it is deemed to be received by that person in India. Whether it has been remitted from outside India does not matter. In case of black money, there is a fixed rule. If anything has been found, it is declared as black money, then it will be treated as it has been received in India. So only fourth point you can understand now. 1, 2, 3 you will get when you will read future chapters. So these are test your knowledge question. I believe you should technically solve it. Let me solve 1 or 2 for you. Mr. Ram, an Indian citizen, left India on 22 September 21 for the first time. So now the exception applicable, point number B, because Indian citizen left India for the first time or he is going for a job. So citizen has gone for job, then exception 1 applicable. That means only 182 days condition will be checked. He left India on 22nd September. So how many days he was in India? He was in India for only 175 days. Like April, May, June, July, August and September, 22 days. So he will be in India for only 175 days like that. So because he is not fulfilling that condition, 182, so he will be called a non-resident in India. Same Mr. Day, a non-resident residing in USA since 1990. He is coming back to India on 1st April 2020 for permanent settlement. He is not coming for visit. He is coming for permanent settlement. So both conditions will be applicable. So because he is coming on 1/4/2020, so he will be in India for the full year. In previous year 21-22, 182 days. So he will be a resident as per basic condition 1. Now we will find out whether he is a NOR or ROR. So because he is coming first time in India in 1/4/2020. So in last 7 preceding year, he will be in India for 0 days. So sorry, he is in India for only 365 days because he came for 1st April 2020. And our previous year is 21-22. So in the preceding year, 20-21, he was in India for 365 days, which is less than 730 days. So this condition is fulfilled. So he will be a not ordinary resident. Clear? Now these are questions related to incidence of tax. Sorry, again. So these incidence of tax question is based on income arises deemed to arise concept. So I am going to discuss question number 3 because there is some special point I have been colored or highlighted with yellow color, because if I will not explain it to you, you might get confused that the treatment is something else. Let me tell you how. Like Mr. Ramesh and Suresh condition has been given in question, and it has been said that we need to find out whether he is a resident or not. Mr. Ramesh and Suresh are brother and they earned the following income during financial year 21-22. Ramesh settled in Canada in the year 1996 and Mr. Suresh settled in Delhi. So Ramesh is technically a non-resident and Suresh is a ordinary resident. So because Suresh is a ORR, so all income arises in India or arise outside India or received in India or outside India is going to be taxable for of previous year. We just not need to take any preceding year income, and remitted and brought need to be ignored. So anything, any income which is previous year income is going to be taxable for Suresh. And because Ramesh is technically a non-resident, so only two incomes are going to be taxable for him. If it's received in India or deemed to receive, or arise in India or deemed to arise. Understood? Let's solve it. Interest on Canada Development Bond. Only 50% of interest received in India. So Mr. Ramesh is non-resident. So in India only 50% received. So 17,500. Whatever is received in India is going to be taxable for Ramesh, and for Suresh, whole 40,000 is going to be taxable. Here is the solution: 17,500 and 40,000. Clear? Dividend from British company received in London. So dividend from domestic company treated as deemed to arise in India, but dividend from British company will not be treated as deemed to arise. So for Mr. Ramesh, because he's a non-resident, nothing is going to be taxable in India. But for Suresh, everything is going to be taxable in India. Doesn't matter. That income should be only related to previous year, and then no other condition applicable for Suresh. Whole 20,000 going to be taxable. We can see it in the solution. Nothing is taxable for Ramesh, and for Suresh, that is 20,000 is taxable. Again, profit from a business in Nagpur, but managed directly from London. Now the business in Nagpur, understand, this is a very tricky point. We might thinking it's control from London, does not matter, because if business in Nagpur, that means income arises from India, because business is India. So from wherever it is controlled, sorry. My apologies. So business is in Nagpur, that means income is directly arise from India. So if it is arise in India, then it's taxable for all, whether non-resident or anyone. So 1 lakh, and 140, both is taxable for both of them. You can check the answer. Short-term capital gain on sale of share of an Indian company received in India. Amount said received in India. If it is received, it's taxable for non-resident also, full taxable. Sorry. Next, income from a business in Chennai. Again, Chennai deemed to arise in India, taxable both amount for both of them, 80,000 and 70,000. Fees for technical service rendered in India. This is the condition after taking medicine. So you don't think I have not taken the medicine. After taking medicine, this is what is happening with me. So before medicine, though, I won't survive. So fees for technical services rendered in India. So services rendered in India. That means income arises in India. Received anywhere, but because you have done work in India, again, arise in India, taxable Mr. Ramesh. Suresh has no income of that kind. Interest on saving bank in UCO Bank, Delhi. So bank is in India. You have earning income in India, taxable for both of them, 7,000 and 12,000. Oh God. Now, 8th and 9th point is very important. That's why I am discussing this question with you, because you might not get confused. Now, agriculture income from a land situated in Andhra Pradesh. So now, Andhra Pradesh is in India, of course. Agriculture income, that means income arises in India. So both is going to be taxable because income arises in India. But because we have agriculture income which is exempt from tax. So these are income arise in India. If somebody asks whether this income is arise in India, answer will be yes. But this is not taxable because agriculture income is exempt in India. This you will get to know when we will discuss chapter number 3. So this point will not be available over here because nil, and it is written in the note that income exempt from tax. That's why we are not considering it over here. But that is the income deemed to rise in India that fulfill that definition. 9th is again very important. Rent received in respect of house property. That is the income from house property. And rent is from Bhopal property. So again, it is arise in India, 1,60,000. But whenever you will see the solution, then the income is 70,000 and 40,000. Why? Because income from house property has a 30% deduction. You will read that in that chapter only. So if you will see the solution, you might get confused. Where is 1,60,000? Why this 70% value has been taken? Because in case of income from house property, whatever rent you receive, 30% is deductible. Only 70% is taxable. So that's we took 70% off. This provision you will be of course going to understand when you will read the chapter of income from house property. Life insurance premium has deduction concept. Deduction will be read in deduction. So I have just, due to these two yellow provision, I have explained, because these have those provision which you are going to read in future chapter. Same, you need to try question number 4 and 5. Again, I have did this 6,50,000 yellow in this question also, because there is salary have a deduction of 50,000. So 7 lakh has been received, but there's 50,000 benefit. That's why I have taken only 6,50,000. That you will be read in salary chapter. So again, this is partly taxable, etc. There's a separate provision which you will read in future. So you should not get confused. This is my special advice to everyone. Revise twice. That's my advice to make you wise. You have to revise everything twice. Let me see some special queries there. And if any queries there, I'll take it. And let's see, we can take MCQ tests or not. How much time we left? Okay, so we were over there. We have discussed. Okay. Jayendra sir, in book in illustration 5. Let me write down this illustration number, Jayendra. I will explain you in the next class, because I don't have book right now. So please write down, not the illustration, please write down the page number also. I'm writing down 5th illustration number for residential chapter. I'll explain in the next class. Okay. Jayendra. Okay. Next, Banathi saying, so despite your illness, you are taking class for us. We are blessed to have this kind of faculty thanks to ICA. Yes, you should thanks to ICAI and Board of Studies and each and every person who are working to make all this successful. You should thank you for that, because I have told you there are a lot of things. Everything which is important is difficult. And whatever is difficult is important, but there are some exceptions also. Like you are getting these classes for free, and it's very easy. Even it's easy, that does not mean that is not important. This is very important, because somebody else is doing this for you and taking so much pain of you. The same way, your parents. You got your parents for free, and we do not value them because they are free with them, but they are the most important thing in your life. So never, never, ever hurt your parents. Okay. Next is. Where is the topic? Survey. Okay, Vishal is asking, sir, where I have paid tax for the income which is not actually received yet and becomes bad debts in future, then can I get reduction or tax refund for it? No. There are some situation, the cases why it happened. This, on the basis of fact, it can be done if you have paid tax on it, and if it is a bad debts, then you can claim it bad debts in next year if possible. But there's separate provision. We do not discuss these kind of provision in our technical provision. These are practical things. Okay. Okay, Kushi of South, I do the same to remember the sections, write in stick notes on pages. So as I told you, use a page, but I recommend use a big chart paper. So if you have a lot of sections in a single place, in a single chart paper, that will actually work more nicely. Because when I was studying, I took the calendar sheet, the backside of a calendar, and I technically make the whole section on a single 1 or 2 pages. All section has been come on a single calendar page. It is very huge. So if it is a single page, it will be really easy for you to remember it as a photogenic memory. You should not use a lot of pages. That will create a problem. So for a trial, you can do that. You can write 10 or 15 section and paste it on a wall. But if you want to implement it, you have to take a chart paper and try to make as much as section on a single page and then paste it. So it will be really easy that whole chart paper will be work as a single photogenic memory case. It will happen, trust me, believe me. Riya Doshi asking the laptop example. Okay. Jayanupal is saying, Thank you for valuable motivation, sir. I am attending this all class. My first year old baby. Old baby. Oh, you are married. Congratulations. Most of the time I couldn't answer the options at perfect time, but I always complete the class after live session. Thank you so much, sir. Welcome and all the best. If you are having baby and you're studying, that's what I call passion. That's why I call a very strong feeling that is follow your passion. And you have to do sacrifice and you're doing it. I believe you will be a chartered accountant in future and hope to see you someday. Okay. The laptop example will be treated as income from other source. No, it will not be treated as income. If you got a laptop for your friend and you deliver it to the same person, there is no concept of income. That will not be treated as business income, not as an income from other source. Person concluding order and delivering it is a consignee. We cannot say consignee, consigner because there is no such agreement. If they become consigner, consignee is a different definition. Okay. The concept of that person on behalf of his delivering, that is like home shop network. You might have seen the example on a TV channel, teleshopping, home shop. What they do, they technically advertise on behalf of the manufacturer, get a call from you, just like they are receiving an order from you, and the order has been transferred to the manufacturer. They deliver goods to you directly or indirectly. That is a technical example of teleshopping network, home shop network, whatever you might see on the dish TV, etc. That is technically how it works. Yes, you can explain these conditions in your own language, but the meaning should be same. Next. Sir, if only movie release in India but no shooting is done, if anything release in India, that means you are getting ticket income or releasing income or sponsors income from India. In that case, it's going to be taxable. Whether a real income arises from India, that is going to be taxable, whether shooting has been done or not. So whatever Hollywood movies they shoot outside India, but they release in India, in that case, we are going to watch it via on TV or OTT channel, etc., or via cinema hall. So we are paying. So in that case, of course, they have transferred their distribution right to all the cinema halls, etc. So that's income arising directly from India. That is going to be taxable. सर मंचांजलि is asking, sir, capital asset में बस ये देखना है कि वो इंडिया में होनी चाहिए, no matter whether place of payment. Yes, no matter whether place of payment. If capital asset is in India, then it need to be included in the head of capital gain. There are some special cases also you will going to read in capital gain chapter. Government company paying to their employee who work in Japan and non-resident is also taxable? No. If only central government, state government doing this, then it's only going to be taxable. In other case, it's not going to be taxable, whether it's a government company, etc. Mr. J is getting fees through providing professional service. Shreya is asking PGBP head. Yes, it will be covered under PGBP head. Correct. Third is effective management question. Third is related to control management. I have told you effective management, place of active management detail is not in your syllabus, but I'll see to it. You should write me the page number also, so I'll check it out. Ankit Gupta, God bless you, sir. You looks like unhealthy. I am unhealthy. Just wind up the session. Get well soon. Thank you so much. Best. Okay. Fast recovery. Get well. Like in salary case. Swati is asking, like in salary case, income of leave period from abroad taxable in India is taxable outside India too. If it is taxable both cases, then there is a concept of double taxation avoidance agreement. That's why I say now, please take the full class from starting. I have already answered this question twice or thrice. That if income is taxable in two countries, there will be a double taxation avoidance agreement chapter. MCQ will be in next class. Yes, I am also thinking MCQ I should take in next class. Thank you, thank you, thank you. So I have taken all the queries. Yes, done. Okay. So I am ill, but I have completed all the things. Okay. So what we will do, we will take MCQ in the next class. You should get study. I will say 2 MCQ. I guess I have prepared 20 MCQs for residential status. So whenever we have our third class, the last session for third chapter, I'll start that from the MCQ because third chapter is very huge. We need to complete it. We need to take MCQs also, complete MCQs also. So be on time, and I'll try to complete the MCQs and the chapter also on the same day. So our class now on 23rd. Yes, 23rd evening session. So see you there, and thank you so much for everyone. Good night. Take care. God bless you. So, Mr. Ram, can we start?